Welcome to today's market report. European stock markets are seeing edge higher at the opening on Thursday after the region's biggest economy, Germany, shied away from a significant tightening of restrictions on business despite posting a new record high of COVID-19 infections. A meeting between Chancellor Angela Merkel and regional governors on Wednesday led to only modest tightenings of rules around gatherings and left all shops open, albeit with a further reduction in customer numbers in some cases. That came as the Robert Koch Institute announced over 32,000 new cases of coronavirus on Tuesday and the third straight day of over 300 deaths. The DAX future this morning traded 0.1% higher, CAC 40 climbed 0.1%, FTSE 100 rose 0.2%. The slowdown in German economy was evident earlier in the month. GfK German Consumer Climate Index survey, where the main index fell by more than expected to minus 6.7 in December from a revised minus 3.2 in November. The European Central Bank is scheduled to release the minutes of its latest policy meeting later in the session. Volumes are expected to be limited as US financial markets will be closed on Thursday for the Thanksgiving holiday. Positive news surrounding vaccines to treat COVID-19 has powered the move higher in global stock markets, with AstraZeneca reporting encouraging results for its candidate on Monday. In corporate news, earnings are due from the likes of Britvic, Mulberry Group and Aviva. In France, Remy Cointreau reported first-half results while struggling car rental firm Europcar said it had reached an agreement with its creditors on a debt restructuring and recapitalization plan that will help it avert bankruptcy. Oil prices eased slightly on Thursday after gains overnight on the back of a surprise fall in crude inventories. The market has risen around 9% this week as traders hope for a prompt rebound in demand next year as vaccines bring the pandemic under control. Crude futures traded 0.1% lower at $45.66 per barrel. Brent fell 0.1% to $48.50 per barrel. Gold futures rose 0.2% to $1,809.85 per ounce. On the FX front, GBP/USD struggles for a clear direction near the highest level since 2nd of September, having rallied for consecutive 9 days. The pair bulls catch a breather around 133.90 while heading into Thursday's London Open. While receding Brexit optimism and the UK's COVID fears tame the bulls, the US dollar's losses outweigh everything amid a quiet session on Thanksgiving Day. The UK Finance Minister Rishi Sunak's effort to tame the biggest budget deficit since World War II couldn't disappoint the cable buyers the previous day as the US dollar index dropped to a fresh low since 1st of September. Not only the downbeat data, but risk-on mood also negatively affected the greenback on Wednesday. On the other hand, the European Commission head Ursula von der Leyen showed readiness to walk away with no trade deal with the UK, while France also sounded grumbling over the fisheries issues, though Ireland's PM seemed hopeful in recent comments. The UK's COVID-related death toll surged by 696 to 56,533, the highest daily jump since May 5th on Wednesday. Even so, UK PM Johnson kept up the mood to celebrate Christmas. It should be noted that the US-China tussle is back in focus, with both the nations missing on the trade promises even after 10 months of the much-cheered deal. Also, the American government sanctioned on 4 companies from China and Russia concerning the Iran missile program spoils the mood. Futures stay mildly positive amid vaccine hopes and a light calendar due to the US holidays. GBP/USD bulls are likely to stay on driver's seat as the dollar index remains pressured and the Brexit hopes, despite receding of late, remain on the table. Overbought ISI conditions tease bears to look for entrance below an upward sloping trend line from 2nd of November at 133.60. Eurodollar renews 3-month highs near 119.40, benefiting from a broadly weaker US dollar, whilst according to Westpac, the Eurodollar's 115 to 120 range is at risk as hopes for 2021 recovery outweigh the grip of COVID-19 restrictions on the region and likelihood of the European Central Bank Pandemic Emergency Purchase Program and targeted longer-term refinancing operations (TLTRO) easing. Last week's block of EC's vaunted recovery fund and its 7-year budget by Poland and Hungary may be seen as more of a frustration than risking any failure to implement the fund and budget. The dollar index was down 0.1% at 91.892, falling to its lowest level in more than 2 months. This is today's market news. Thanks for listening. We'll see you next time.